Hey, Marky! Back again with another video, and today's is the market going to crash? Is the market going to crash? Woo! The biggest question everybody asks. That's what the video is today. Here with you guys, dropping a new video. The market is not going to crash. From all the economists, people that I've listened to on podcasts, articles that I've read, as I do try to stay in the know, up to date on the market, it is not going to crash. I can tell you that right now. 2008 and 2021, 22, total different beasts. The last three, 4 years even. It's a total different beast than what it was in 2008. And I can give you some reasons. And one reason why, the lending has been updated, more safeguards, they're giving out safer loans. So that was part of the reason why there was the crash in 08 was the predatory lending that was going on. They had people that were walking into banks and mortgage brokers, giving out stated loans. They're walking into the bank or they're going to their mortgage broker and saying, hey, this is the income that I make. This is what I state. So they say stated income. They weren't even verifying this stuff. And they say, oh, this is how much you make? Okay, cool. Here's the loan. Do you see an issue with that? Right? They were writing all these loans for these people knowing that they could not afford these homes. And if they didn't know it, they didn't verify. That was the biggest thing. They didn't verify anybody's income like they do now. If anybody who has tried to buy a home within the last 6-7 years, they know they run you through the ringer now. They want to know where your money coming from, how much you made, are you late on any payments, how much debt you got. I mean, it's a lot of things that go into it right now. So they kind of make sure that you are approved and can afford that mortgage payment. Because now when they're lending this money out, they want to make sure that you can do it and keep it. Because for 6 months, I think it's 6 months to a year, that if you default on that loan, the lender has to give all that money back. Whatever the percentage is they made off of giving you that loan in 6 months to a year, don't know the exact time frame, but it's between 6 months and a year, they have to get that money back. Right? Did you know that? So no, they're going to make sure that you can afford these payments so they don't have to get that money back. So that's rule number one. Or reason number one, should I say. In 2008, it was the predatory lending, and it was just ridiculous, As everybody now says, oh, there's going to be a bunch of foreclosures coming soon. People can't afford. Yes, the economy's hurting. Yes, we do have inflation, things like that. And yes, there's still people hurting from COVID, but it's not going to be like 08. Yeah, you're going to see some foreclosures, but it's not going to be like 08. Another reason why is because a lot of these homeowners, they locked in with a 3% interest rate or a 4% interest rate. So the rates were low too. So that comes into factor. So they have a lot of equity now, or a lot of these people that bought within the last even 6-7 years, they have a lot of equity. So that's the thing too. Now people have lots of equity to where even if they do sell, it won't be a foreclosure or a short sale. They'll probably just end up selling it to some investor or something like that, still cashing out. Or they're going to list it and cash out. Okay? So it's not going to crash. It's just not. Okay? The economy is what it is right now. Yes, the government has pumped a lot of money into the economy. Yes, we are going to see some backlash from that. Yes, you will see some foreclosures and some people that can't afford their homes. But yeah, they're just going to put them up for sale and they're going to be listed. Or like I said, they're just going to sell to an investor. We're not building enough homes in this country, and that's one big main reason why the prices are the way they are, is because the demand for housing. I mean, everybody needs housing. So it's the demand that's driving all these prices up. That's why rent rates keep going up, and then that's why people buying homes, that's why the prices have gone up, because of the demand. So it's stabilizing now, a little bit to where, we were in the seller's market. Now it's starting to level out a little bit, but there's not going to be a crash. So people sitting there waiting, thinking there's going to be a crash. And, I heard that for the last 3 years, there's going to be a crash. Has it happened yet? Hasn't happened yet. We done went through COVID and it wasn't a crash. Lockdown for 14, 21 days and it wasn't a crash. So what makes you think it's going to be a crash now? So that's my number one reason, is just because of the safeguards, just a lot safer lending going on right now in the market. So that's why I say there's not going to be a market crash, okay? And that is another reason why the government said, hey, we're trying to help make sure there's not a crash by raising the interest rates. That's got raised. They wanted to calm it down a little bit, which it worked. A lot of buyers fell off because, the interest rates were so high. So that is number two reason why there's not going to be a crash, is the interest rates went up. The government was smart about it. I wasn't a fan of it, but I see why they did it, and it's helping. It's making some buyers, like I said, fall back and get on the shelf. And now there's sellers that are thinking now, okay, it might be a decent time to sell, because they can still jump in and buy their next home after they sell their home and not have to deal with a bidding war or deal with some issue where there's not that many homes on the market. Now, there is a little inventory shortage still, but it's not as bad as it was 2 years ago, where there's bidding wars and people offering 15, 20 grand over asking price and things like that. Those days are gone. So we do see prices in certain parts of the country that have dipped and things like that. We've seen some price reductions. In my opinion, I don't think necessarily it's the prices that are dropping. I think it's people that are still listing their homes thinking it was a year ago or 2 years ago, thinking that they can get this high price, and so then they're having to reduce. So there's about 50% of that going on as well. If they price it right, you shouldn't have to do a big price reduction at all, or if you do, it's minor, So I think it's a little bit of combination of both of those as well. As when people were saying, "Oh, prices are dropping, and we're seeing price decreases," and yeah, they're dropping, but I think 50% of that is just due to agents that are listing these things for top dollar, knowing that they probably aren't going to get it, or these home sellers thinking that they're going to get top dollar like a year or two ago, and they just priced it wrong, so now they have to make that price decrease. So that's another thing that, like I said, is you see the writing on the wall. Yeah, prices are dropping a little bit, but it's not crazy. It's not gonna, the bottom's not gonna fall out like in '08 and everything's, just going crazy and everybody's just selling everything. It's just not. So like I said, with these safe loans and things like that, I think, the feds are going to make sure we're okay. So we cross our fingers on that. But yeah, that's it. That's why I say I think 2005 to 2008, it was a different time, different period than what it is right now. We have learned a lot since then. The lenders have learned a lot. The realtors, brokers, they've learned a lot. The feds have learned a lot. Like, everybody's learned a lot from 2008. So I can tell you this: there's going to be a lot of winners in this market that's coming up, and there's going to be some losers. Which side are you going to be on? Because there is going to be some winners. And, like I said, if you're thinking about buying, the best thing you can do is just monitor your credit and just keep working on your credit score. Get your credit right, so whenever that time comes and you're ready to buy a house or buy a car or whatever the case may be for your family, you're ready and you're prepared. So keep your credit under 30%, which is what they call the utilization rate. So whatever your balance is, keep that below 30%, to help on your credit utilization rate. Keep that low. You want to be at least under 15, in my opinion, but definitely below 30, and you'll be at a good spot and a good position, ready to buy when that time comes. Okay, so I don't think we're going to see a big full-blown crash like '08. Obviously, it is changing, but I don't think it's going to be a full-blown crash. But yes, the change is coming. Some of the changes are already here. We just got to stay firm in what we're doing. You got to stay firm in what you're doing, what you're believing. If you're thinking about buying a home and you're in a good position to buy a home, then it's still a good time to buy a home. Don't let the media, don't let predictions and all this stuff fool you or stop you from what your plans are. Same things if you're selling a home. As I've talked to more sellers daily, there's a lot more that are thinking about, hey, okay, I think it might be time here after the first of the year to go ahead and jump in. As a lot of them were sitting on the fence, on the shelf. Now they're seeing what's happening in the market, and they're like, hey, let me go ahead and sell now. And that way, if I want to buy something, I still can buy it at a decent rate. And the rate's not 11, 12, 13% if the rates go up even higher. There's rumors that the rates are going to drop a little bit, but nobody knows. I mean, even for this prediction, I'm not the guy that says, hey, I know it all. All these predictions, nobody knows. So we're all in the same game. We're all just sitting here waiting to see what happens. But at the end of the day, stick with your plan that you have. If your plan was to buy in 2022 or in the upcoming year of 2023, stick with it, make that plan, and make it happen. Same thing with selling, because people need to buy and people need to sell. Because of why? Life changes. Things happen. You know, sometimes you have to upgrade. You might need another bedroom or 2 bedrooms if you got twins on the way or another baby on the way. Sometimes people need to downgrade, maybe to something smaller. Maybe kids are leaving, going to college. So now you got an extra room that you don't need. Or maybe the mortgage payment is a little bit higher than what you thought, and so now you're ready to sell and get something smaller just to downgrade on the payment. So people will still sell and people still will buy, but it's all predicated off of life changes. Nobody wakes up and just say, hey, I'm going to sell my house today. It's all because of a life change. So if you have a life change and you need to buy or you need to sell, or should I say you're ready to buy or think you're ready to buy a home, go ahead and make it happen. Don't let the media and don't let anybody stop you from your plans and your goals, because at the end of the day, it's all about you and your life and what you want to do. And so if you want to buy a house and the interest rate's 7.5, if you can afford it, good stable income, stable job, not a lot of debt, why not go ahead and do it? Because at the end of the day, if the rates go up higher and say in 2-3 years, it's 10, 11%, and you waited 3 years where you were paying somebody else's mortgage. So that's 3 years you could have been in your house locked in at 7% or 6.5%. And then you're going to be waiting even longer because you're going to say, well, now the rates are 11 or now the rates are 10%. Nobody knows. So just hop on in, jump in the market, and have some fun. Set your goals, set your plans, make it happen. So you heard it here from me today. There's not going to be a market crash. If somebody begs to differ, leave a comment. Go ahead and follow, like, and subscribe, please. And as I always say, stay safe, stay blessed. Peace.